Hello and welcome to the week ahead video with myself, David Madden. Now before we take a look at the major events of next week, let's just take a quick moment to recap of the major events of the week just gone. Yesterday we had an update from the European Central Bank. The ECB hiked interest rates by 50 basis points. It was a larger hike than expected, as economists were predicting a hike of 25 basis points. But at the same time, the European Central Bank also announced its new scheme, the TPI, the Transmission Protection Instrument, and this was essentially a government bond purchasing scheme to try and put a lid on bond deals for countries that are fairly indebted. So in one hand, monetary policy was tightened, but on the other hand, the European Central Bank gave an indication that it could also be loosened should they deem it fit to use. So what we saw in the euro yesterday was a sharp move to the upside in euro dollar, but then as traders realized it's sort of two steps forward, one step backward in relation to monetary policy tightening, we then saw a move to the downside in the euro. So looking at the price action here, we've seen euro dollar hand back all the gains it made yesterday. Why is this important? Well, looking ahead to next week, on Wednesday we have the update from the Federal Reserve, and on Thursday we have the advanced reading of US GDP for the second quarter. In relation to the Federal Reserve, economists are predicting a 75 basis point hike from the US Central Bank. Last weekend, there was an article in the Wall Street Journal suggesting that the Federal Reserve are more likely to steer towards a 75 basis point hike rather than a 100 basis point hike. But keep in mind, we were surprised by the European Central Bank this week, and also last week we were surprised by the Bank of Canada, as both banks hiked by larger amounts than originally expected. Taking a look at the price action of euro dollar, we can see it's been edging lower in the short term. The much longer term trend for the currency pair is lower as well. Looking at the MACD indicator, we can see that momentum is in negative territory, indicating that the bears are in control. If we do see a continuation of this downward move in euro dollar, we could look to target this zone here at 1.0027, and a break below that could see a target 0.9951. It's worth noting that euro dollar has now actually slipped back below all three of these simple moving averages, which underlines how bearish the recent short-term move has been. Now, even though the short-term trend for the currency pair is lower, it's worth noting the more medium-term trend for the currency pair is higher. And if euro dollar can manage to hold above parity, hold above 1.0000, that could be an early indication that the more medium-term upward trend is still in effect. Should euro dollar rally from here, it could look to retest this zone here at 1.0277, and a break above that could target this zone here at 1.0324. What we could also see volatility in next week is the US 500. Given that on Wednesday we have the Federal Reserve interest rate decision, and on Thursday we have the advanced reading of US GDP for the second quarter. Looking at the recent price action of the US 500, there's been a broad rally in US stock markets. It's fair to say traders aren't as fearful as they once were about the possibility of a 100 basis point hike from the Fed, but until we actually have that announcement, we actually don't know, we can't say for sure what's going to go on. Looking at the price action here, it's been moving aggressively higher recently. It's above all three of these simple moving averages, and while it holds above those metrics, it's likely the recent upward trend will continue. A further rally from here could see a target 40.30, and a break beyond that could see a target 40.96. Taking a look at the price action in the last few hours, we can see a continual rise in the US 500. But if you take a look at the MACD indicator, we can see that positive momentum has petered out, and actually now momentum is ever so slightly slipped into negative territory. And the divergence between the two, the fact we're in negative territory here on the momentum, but yet the price keeps rising, that the divergence between the two could be kind of a warning sign that a change in trend is in the offing. If we do see a move to the downside in the US 500, where can we find support? Well, potentially from this zone here at 39.26, and a break below that could see a target this simple moving average here, which comes into play at 39.01. That's all from me in this video. Thank you very much.